Welcome back. Joining me for a look at the day's markets activity is Nick Kunze from Sanlam Private Wealth. Thank you so much for your time, Nick. Of course, we have to start off with that Fed decision, and maybe not really the decision that markets are hanging on, but more to the forward-looking statements. Was this a significant pivot by the Fed and maybe unexpected?
Massive pivot. It was a 180-degree flip-flop. I mean, back in September, Mr. Powell and his team were talking about higher for longer, higher for longer. Every single sort of platform they went on, higher for longer. You do not expect us to cut rates. Do not expect us to cut rates. I think that is a quote. And then last time he stands there, looks at all of us and goes, by the way, the dot plot says 3 cuts next year. I mean, literally one of the more extraordinary things I've ever seen. So yeah, so all everything is talking about today, but nevertheless, I guess good for markets. But you have 2 questions, and I mean, is the tail wagging the dog a little bit here, because the market had been pricing this in weeks ago. Yeah. Contrary to what him and his FOMC were running around saying. So yeah, this time the market got it right.
But now wait. So markets always seem to be more dovish than the Fed, because as you said, the markets had been pricing this in for a long time, even while Fed officials were still saying that inflation still remains too high. We might need a higher for longer situation. Do you think at this point now, with the dot plot forecasting 3 hikes, do you think the markets could actually even go further and then expect more cuts the next year?
So I mean, if you had to look at the data, and it's available for all of us to see, it comes out every day, it comes out every month. We get the PPI, the PMIs, all the sort of the various inflation prints that come out. They've clearly been rolling over. I mean, we've had inflation levels sitting a year or so ago. Obviously, we're not sitting there now, but they were like 8-9%. Now inflation's coming in well under 4%, so it's halved. That's a huge sort of, retracement. And then, of course, not to mention the fact we don't often speak about it, but the price of oil. The price of oil is back at, 30-40% under where it was a year ago. So that's a welcome relief too for Americans who, are the consumers are the, 60-odd% of the GDP of the country. And even for us in South Africa, we import all of our inflation. So emerging markets also seeing a nice little early Christmas present with this inflation numbers rolling over. I'm not saying we're out the woods yet, I mean, the target for most central banks, I don't know why it is, but it tends to be 2% for everyone. We're still far from that 2%, but it is coming in. And markets, to your point, markets are effectively discount mechanisms. We discount the future. And if you look at that 10-year note in America, under 4% as we speak, where the Fed funds is at 5.25%. So they are pricing it in already.
All right. Well, still on central banks, the BOE and the ECB also had their monetary policy decisions today, and they kept interest rates steady. What did you make of that? Because I think from what I saw from the BOE, the narrative was higher for longer, so seeming more hawkish than the Fed.
Yeah, so the BOE and the ECB, as we speak now, while we're recording this, Madame Lagarde speaking as well, I think they must be quite irritated with Mr. Powell, because this is not what the plan was. Because their plan is the higher for longer narrative. And in fact, the ECB is still grappling a little bit with a little bit more stickier inflation that we're seeing in North America. And in fact, a few headlines just before it came on was literally along those lines. So they've still got a bit of an inflation problem, and I don't think they're going to be pivoting as quickly as the Fed have done for now anyway, and that appears to be the same with the BOE.
Yeah. Well, actually, I mean, you were talking about how we're not out of the woods yet, but looking at the commodities that have been heavily under pressure this whole year, and all of a sudden coming back, I think the last time I checked, they climbed over 7%, that index on the JSE, and I'm wondering then if that really that is the bottom, and that we've now finally pivoted when it comes to the direction of those commodity shares.
I mean, that's such a difficult call, and I guess a lot of investors will be thinking what to do going into the new year, and that is one of the more beaten down sectors. The average commodity share down 40-50%, some of these plat shares down 60-65%. So yeah, I mean, do you actually phone your broker and start buying next year? I'm not sure, but it is a welcome relief with this weaker dollar. What we do need is, with the commodities, those who favor them, is a weaker dollar. That's always been the case. But not only that, but then then the other side of that argument is we do need an economy that's growing. We need a China, which is the biggest consumer of commodities, to come back online, and that has been missing. So, I mean, if you get those right in the next few months, maybe first quarter, Q1, Q2, you get China slowly bouncing back nicely, the dollar continues to weaken, which I think it will do, then yeah, maybe, I don't want to get any messages after this show, maybe we've seen the bottom for some of these commodity shares for now.
Yeah, even Anglo, because that's also been one of the stocks that have been heavily under pressure, and we did see a bounce back today, specifically on Anglo, because also there was a question on a stock watch this week that asked if Anglo is a short. There have been specific concerns on Anglo, and I'm wondering that maybe, this is also just a case, this bounce back that we're seeing, a case of investors holding on to the redeeming qualities of Anglo and choosing to look past the concerns that investors have flagged this week.
So, I mean, let's answer the Anglo's question. I mean, that is obviously what a lot of people have been looking at, and I'm sure they've been asking on Stockwatch as well. I mean, Anglo's, given that, I mean, I went through it with a fine-tooth comb, that investor day on Friday, the slideshows that were shared with us, there was very little good news. There really, I can understand maybe it was a bit extreme, the share price move on the Monday, but a bit extreme to the downside, but very little reasons to buy it. They've got some severe challenges, not just what's happening in South Africa. They've got some problems. Their largest copper mine, Los Broncos, I mean, their grade was surprisingly a lot weaker than all of us had anticipated. The demand for copper, which has been, certainly running a little bit of a deficit this year, they're saying the demand is slowing. So very little good news. Would I short it? No, and I'll tell you why I wouldn't short it, and the viewer that sent it in, just be very, very careful. Anglo's is a premium asset for someone who's got a lot of cash. I imagine at some point that the management at Anglo's are going to do whatever they can to try and appease their shareholders. If it means breaking the company up as a possibility, or someone comes sniffing around like a Glencore who's got lots of, given what they've just done with Teck, with the Canadian operation with regards to the coal, it could be possibly something of interest to someone. So just be very careful shorting it in that respect. But for an investment point of view, it's difficult to dive in right now, other than to say that, well, I guess the price is cheap, but you can't put them in the same boat as BHP Billiton at the moment.
Well, talking about boats, Nick, it seems that a high tide lifts all boats, because we did have Teresa, the chrome and PGM producer, coming out with annual results today. There was a decline in revenue in the bottom line, but still that share price managing to climb. And I'm wondering at this point, we know obviously the challenges that PGMs have gone through, if chrome is a significant cushion on that front.
No, I don't think it is. It still forms part of the basket, but I don't think it is any. It's certainly not immune to global slowdowns. So the platinum group metals itself, actually the platinum price itself. Obviously, we all know the trials and tribulations with electric vehicles coming on stream, and they're going to be up against it for a little bit. But chrome itself not immune to it. It's exactly what we've seen with the other sort of base metal prices as well. Copper, the slowing economy is knocking all of them, unfortunately. But these businesses are cyclical, and you just got to wait till they get that bounce back.
All right. Well, Nick, let's get to your stock pick for today. What will it be?
Well, going with the conversation, the theme we're speaking about now, going with Glencore. I think they've been unbelievable with their allocation of capital recently. That deal nicely cemented, which opens up a lot of free cash flow with that Teck deal now finalized. And given exactly what we're talking about now, this huge volatility in these commodity prices, 25% of Glencore's earnings is derived from the guys sitting at their desks trading these commodities. So this is going to play nicely into their hands. So they're positioned very nicely going into New Year.
Well, actually, before I let you go, Nick, because there was also a question on Stockwatch, I think 2 weeks ago, that asked what the value of Glencore getting the coal assets of Teck, what the value there is. Would you care to shed some insight on that?
So I haven't got the exact numbers, but what it did do was open up a lot of free cash flow. So they're buying a lot of that cash flow going forward. So what it did does do to them is basically put them in a position where we've seen the other miners closing the odd shaft, Sibanye, Impala as well, talking about cutting back on their production to preserve capital. What Glencore did was a bit of a stroke of genius, is they don't have to do that now because their cash flow has actually increased after this deal. So it just buys them even more time and gives them a much better balance sheet proposition compared to the others. So, I mean, that's the sort of the high spectrum answer to that.
All right. Well, thank you so much for your time and analysis today and answering some of the burning questions that we got on a stock watch in the last few weeks. I appreciate it, Nick. That was Sanlam Private Wealth's Nick Kunze taking us through the action playing out in the equity scene.